Hello and welcome to Smaulgld's top gold, silver, and cryptocurrency stories for the week ended December 24th, 2017. We're making this recording on December 26th on Boxing Day for those of you in the United Kingdom. Merry Christmas to all. So we had a wild week, cryptocurrencies wild week, and we're going to ask what might pop the cryptocurrency bubble, if indeed there is a bubble. We're going to cover the great crypto crash and recovery that happened during the week. U.S. tax reform was signed into law by President Trump. It was supported only by Republicans. There's been some positive reaction to it, some fallout. We're going to discuss what that may have to do with the markets. Russia reported they're going to set up a physical gold exchange, and also during 2018 they are going to buy more U.S. dollars. Belarus, it legalized Bitcoin ICOs and made them tax-free for 5 years. We're also going to cover some of the regulatory announcements made during the week regarding cryptocurrencies. And the Russian investigation took a bit of a turn. So far, there's been no evidence of any direct collusion between the Trump campaign and the Russians. But now it looks like they're investigating Jill Stein. I think she might have had dinner with a Russian during the campaign. The DOJ orders a fresh look at the Clinton-Obama Uranium One deal with Russia, and Coinbase unexpectedly launched Bitcoin Cash on its platform. There was some turmoil. We're going to discuss that. And Charlie Lee, Litecoin creator, sold all of his Litecoin just before the Bitcoin Cash announcement, although the two were, where he says, were not related. And we're going to see some of the stunning gold and silver finds and seizures that occurred during the week. So let's get right at it. But first, let's talk about gold and silver prices. Gold rose. It's up 1.5%, and silver was up 1.9%. Gold was already up to, well, it ended on the Friday before Christmas at $12.74. As of today, just about closing on December 26th, it's up to $12.83. And silver also managed to post a healthy gain, over 2% to $16.37 on Friday. But if you include the Tuesday trading, it's over 2% because it's up to $16.54. So it looks like silver now is finally back in black for 2017. And it looks like gold, barring some major correction, is going to finish the year up as well. Gold-silver ratio, however, has barely moved during the year. It's actually gone up to about 77. It almost reached 80 at one point. Started the year in the low 70s, and it looks like it's going to end the year in the upper 70s for all the people counting on the gold-silver ratio going down because it's unsustainable. Well, it's been unsustainable for 5 years, and indeed, it has sustained an upward trajectory. Okay, let's get into the top stories. If you're interested in donating, I'm sure that's one of the things you'd like to do before you close out your year. To Smaulgld, you can do so via PayPal, Litecoin, Bitcoin. The address for Litecoin is on the website in the right-hand column. The PayPal, Bitcoin instructions are also on the website as well as below this BitChute and YouTube video. Now let's take a look at the top stories of the week. Interesting, we start out with Smaulgld blockchain. For the week, I changed my tag on Twitter to Smaulgld blockchain because there was a company, Long Island Iced Tea, basically one of these Snapple knockoffs, I suppose. They make iced tea. Well, they changed their name to Long Island Blockchain or Long Blockchain, and their stock price rose 200%, then 500%. So it looks like we're in the .com era. Only with blockchain, you add blockchain to your name, and your company is worth more. So I figured Smaulgld would be worth more and gain far more attention if I just called it Smaulgld blockchain. And there's the Long Island Iced Tea reference right there from Cointelegraph. Blockchain at companies rename themselves to bump up share prices. All right, so let's take a look at this cryptocurrency wild week we had last year. So it started out with a drop. Bcash, Bitcoin, Ethereum, Litecoin, all were dropping on the 21st. And then that selling accelerated And then all four of the big four, including Ripple. Well, Ripple was actually up for a while, but the other four had fallen. All the cryptocurrencies, basically, other than Ripple for a while, had fallen 10-15%, and then it accelerated. And you could see here down 40%, 20, and most of them ended up falling 40 some odd percent. And with that major collapse, I think Bitcoin went down almost to below 10,000. Litecoin was in the hundreds, upper hundreds. Ethereum was down in the 600, 500 range. And even with those falls, month over month, Bitcoin was still up 50%. Litecoin was still up 200%. Ethereum up 68%, even with the big falls. But the remarkable thing was how they bounced off the lows. Within hours, maybe 8 to 10 hours, Bitcoin had risen from about 10,000 all the way back up to 15,000. So a 50% retracement on the upside. And this is something that we're seeing. This is not the first time. I've got a chart coming up from Zero Hedge, actually it's from Modeling Economics, but that we've seen a lot. Every quarter, Bitcoin takes a big crash and takes down the rest of the cryptocurrencies with it. So your normal bubble cycle where the thing collapses, everyone's seen that classic bubble chart where it goes up and then it collapses and then it kind of levels off at what they deem fair value. This is different. Bitcoin bubbles have been collapsing. There's probably been 10, 15 major Bitcoin bubble bursting incidents over the past 3, 4, 5 years. So the question is this really a bubble, or is it just as it grows, this is what it looks like? I actually think if it was a bubble, it would have popped the first time and never come back. It keeps growing, keeps popping. Look, it popped at 1,000, it went to 400. It's been going up and up and up, and it keeps popping and then going back up again. Your typical bubble doesn't reflate 8, 9, 10 times over the course. Once the bubble is popped, it's over. It may have an echo bubble like the housing bubble has now, but it doesn't happen within these short periods of time like we're seeing with Bitcoin. And for those people calling Bitcoin a store of value, during the 24 hours of this Bitcoin collapse and recovery, it was at 18,000, then 14, down to 10,000, back to 12,000, back to 15,000. That's not a store of value. That's a speculative asset doing what speculative assets do, rising and falling based on speculation, and nor is it a safe haven. Although there are people arguing that Bitcoin is a safe haven. And now, I'm not sure how that works, but you can leave your thoughts below. So, by 5:30 in the afternoon, remember those prices we were showing, Bitcoin, all the others down, 10 o'clock in the morning, down 40%. Well, by early evening Eastern Standard Time, they were pretty much almost back to where they were. And here you can see, after being down nearly 40% earlier today, Litecoin is down just a scant 4%. And Bitcoin right now, if I just do a quick check on my phone here, it's at close to $16,000. So it's actually up from before when it crashed. Now, when it started to go down, I was anticipating this because it's happened before, and we saw a lot of new money come into the crypto space after Thanksgiving, and people speculate. People were meeting with their families, someone at the dinner table, or many people at the dinner table, mentioning all the money they're making in Bitcoin, Litecoin, etc., telling them where to buy it. Coinbase saw so many new, hundreds of thousands of new accounts created right after Thanksgiving. So obviously they're buying these coins on the basis of what relatives tell them, word of mouth, and so on. And as we saw on December 21st, as things started to fall, I started questioning that maybe this was just end-of-year profit-taking, maybe some wet feet from some of the new investors who had just bought in and weren't used to this dramatic. I mean, these are crashes. When the stock market crashes 20%, it's national headlines, international headlines. But Bitcoin and these cryptocurrencies collapse 20, 30, 40%, almost as a matter of course. And each time it happens, you think, this is it. This is the big one. This is it. Game over. No more cryptocurrencies. They're going back down to their intrinsic value 0 and so on. And then they come roaring back. And so I asked the question at the time of my followers on Twitter, is this year-end profit taking? You know, a lot of the people who had bought Bitcoin, there was some paint taping probably for some small funds, want to say they were in cryptocurrency, so they rushed in November. And then there's probably a lot of funds who made some money during the year and wanted to book their gains. So I asked, is this profit taking or a collapse underway? And about half the people thought it was a collapse underway. Well, that wasn't it, because things are bad. It may collapse again, but it's now 5 days later and things are back to where they were. And that, you could say, is what happens in a bubble. You get it goes down, it rebounds as a dead cat bounce. But question is whether it roars back even higher. I don't know, but that's been the pattern. And we'll see if this was the end of the Bitcoin cryptocurrency bubble, or this was just another one of the corrections on the way to higher highs. I mean, this truly is a remarkable thing. I mean, how many times has the Bitcoin bubble burst? So it's not like any, I am going to say it is different this time, because it's not based on valuation. It's a new market. It's, when the tulip bubble collapsed, that was it. You never saw tulip bubble prices like that again, ever. So this is much, much different. And also, a lot of people are saying, oh, it's the same. My Uber driver, you know, the old shoe shine boy story from Robert John Kennedy's father. He said, you know, I knew in the Roaring 20s that there was a bubble when the shoe shine guy was telling me what stocks to buy. It's that old 100-year-old thing that where people not on Wall Street, where it hits the mainstream, where the average person all of a sudden knows all about stocks or housing, whatever the bubble happens to be. But I think this is different in that cryptos didn't start with the professionals, didn't start on Wall Street, didn't start with the real estate people. It started with average people getting involved in cryptocurrencies. So the fact that an Uber driver may tell somebody a crypto tip is not the same sign of a bubble as a Uber driver perhaps talking about the latest junk bond or some other Wall Street creation. This is not the same thing. So when people try to say it's a bubble because they're looking at the prior bubble indicators like shoe shine boys and Uber drivers and taxi drivers giving you crypto tips, or looking at these charts or talking about tulips, it is definitely not the same thing, because as I mentioned before, there's been many bubble bursts in this thing, and this did not start with the professionals. This did not start as a Wall Street product. It's now Wall Street is getting involved. Maybe that's the sign of the bubble, a reverse bubble, where Wall Street's getting involved. I don't know. Also, early on, the people that were involved in Bitcoin, and this is why the bubble may collapse if it is burst, if it is indeed a bubble. The first phase of Bitcoiners, they were very knowledgeable about Bitcoin, more than knowledgeable. They knew everything about Bitcoin, and then they layered on a fantasy that it was the most revolutionary, world-changing thing. Every merchant was going to take it. Everybody was going to have Bitcoin treasures and walking around being their own central bank. It wasn't just going to be the unbanked that got Bitcoin, but it was going to be the people that had banks. In a few years, central banks are going to go out of business. Okay, that was the original Bitcoin crowd. They knew about Bitcoin. They read the Satoshi Nakamoto white paper. They followed Bitcoin. So even though maybe they had overhyped what Bitcoin might become, they knew their stuff, and they were going to tell you all about it. The current crop of people that are into Bitcoin, the latest crowd, maybe the ones that came in at some point during 2017, and certainly the ones, a lot of them that came in around Thanksgiving, they don't know anything about Bitcoin. They just know that it's going up, and maybe they heard something, but they're not in it for the same reasons. So the first group here, the people that are fanatic researchers and all about Bitcoin, they're your hodlers. They're the people who are going to hold on for dear life. They still believe the Bitcoin story. They still believe the crypto story. it's the next round of money from the small people that came in. They don't know jack about Bitcoin. They really don't. They couldn't tell you what Lightning Labs is. They couldn't tell you what a fork is. They couldn't tell you the difference between Bitcoin and Bitcoin Cash. And that's a problem. But I did a little quick search on Google Trends, and here's what I noticed. Like, people are searching more how to buy Litecoin than even to want to know what it is. And that to me is a sign, I don't know if it's a bubble, but it's definitely a sign of people buying with no rationalization other than it's going up. It's more important that they figure out how to buy the thing than it is to know what they're actually buying. Now, there are people who already know about Litecoin, so obviously they don't search what is Litecoin, but it seems to me cart before the horse to ask how to buy Litecoin before you even know what it is. This is just an observation. There's a lot of people out there that are so furious, and they just want to tell you how bad Bitcoin is and why everything they see doesn't comport with what they either want or what they think. They want to warn you, you're going to get arrested, there's money laundering, it's going to burst, it's a bubble. Yeah, like they have a moral high ground. They have to tell you all these things because they know. They know. And I saw this quote. Everybody knows the J.P. Morgan quote, or the bastardization of it, that gold is money, everything else is just credit. Supposedly, I ran across this quote, J.P. Morgan. There's nothing in this world which will so violently distort a man's judgment more than the sight of his neighbor getting rich. And I can understand that. These people that are criticizing Bitcoin 24/7, making videos about it, telling everybody how stupid they are, they seem to be very, very annoyed, very, very upset that they're smarter than these idiots who are buying Bitcoin and it's going up, and I think it does cloud their judgment. Now, the Russian investigation. Switch gears here. I think it's face-saving time for Mr. Mueller, the special prosecutor investigating Trump for collusion with the Russians. He's investigating a lot more than that. But now Jill Stein, remember her? I think she finished. She got like 7 votes. She ran for president. She was in the Green Party. And she's now dragged into the Russian investigation. They'll probably drag in Bernie Sanders. He probably said or something in Russian at some point during the campaign. Basically, the only person who has that there was any evidence that was involved with Russia was Hillary Clinton. There was a story in the New York Times about the Uranium One deal. So Hillary Clinton, and of course now as Secretary of State, of course she's involved. She's spoken to Russians, but she had the most ability to talk with Russians because she knew them. I mean, she had diplomatic ties, and so did Obama. Obama met with top Russian leaders. So it looks like this is my opinion, they concocted this Russian thing on Trump just to get something. And it's appearing to look like it is that way, that the Russian dossier was funded Clinton campaign research, and then they used that as the justification to get a FISA warrant. And then with the FISA warrant, they were surveilling Trump, and I just haven't seen any evidence that the Trumps were involved with Russia. I think it's a political mistake. I think that there's plenty of ways to go after Trump politically. Trying to tie him to the Russians is probably not a good strategy, unless the whole idea was to divert attention from Russian involvement with the Hillary Clinton campaign. And maybe that's what it is now, because we're seeing that they're investigating the Uranium One deal with Hillary Clinton. And for those who don't know what that is, the New York Times reported on it back in 2015. The United States sold a lot of its United States uranium to Russia, and that deal got approved by not just Hillary Clinton, but the administration. And then Bill Clinton had given speeches in Russia and got $500,000 for the speeches. There were Russian donations to the Clinton Foundation. I mean, there you have something we actually, I'm not saying it's necessarily collusion, but at least you have factual evidence that if you wanted to make the case, you could make the case. You wouldn't have to have a year's investigation trying to find something. So Bernie Sanders, maybe he's next. I think they need to divert attention from this Russian investigation. But only other than Hillary Clinton, I haven't seen any evidence that anyone else has been involved. Here you go. Attorney General Sessions orders fresh look at Uranium One deal. That's an NBC News. Yeah, people who want Jill Stein thrown in jail. This is for eating dinner in Russia don't get to say that reopening uranium one investigation is a political witch hunt, even if it is. Now, I think that the Russian investigation of Jill Stein, that's fake too. She's on her own trying to get votes. I don't see how she's going to collude with Russia in any way, and this is the first we've heard of it. Uranium one is real, and that's factual. There was a deal. I don't know if it was a corrupt deal, but it does involve, and you could see how it could be, possibly. You have concentration, corruption of power. You've got people in the State Department, the Department of Justice, the executive branch, all there for 8-9 years, and it's a lot easier to collude when you're in power than it is when you are Jill Stein scrambling for votes on your own, or Donald Trump running as an underdog against Hillary Clinton. Now, just a little levity here. Well, some people don't find this funny. I think it's amusing. This presidential coin, I think they've been making them for the last 20 years, and this is your classic, understated, nice-looking coin. This is Biden's. This is Obama's. A very nice blue color here. You got the eagle, e pluribus unum, out of one many. And then here's this year's. I think Pence's coin is nice too. I think I prefer, actually, I don't know which I prefer, the Biden or Pence coin. But look what Donald Trump does. He changes his entire coin, puts Make America Great Again around the top, puts a picture of the White House, 45th President of the United States, and then down here is his name. It's a much gaudier coin. It's got, but, you know, these are the coins that they give, the president gives to people who have done some service, mementos, and I guess he figures Make America Great Again is what he'd like to commemorate when he hands out these coins, rather than e pluribus unum, which is really, it's not much of a statement as to the presidency, either the vice president or the president, so Trump is handing out these coins. All right, now tax reform. This impacts gold, silver. It probably has nothing to do with cryptocurrencies. The whole reason that the stock market shot up all year was this idea that Trump was going to do tax reform. Money was going to come into the markets. We were going to get money back from overseas, from companies at higher tax rates. People were going to get more. Well, it all happened. There's going to be tax cuts for the rich, tax cuts for the middle class, no tax for the lower middle class. And that was why the stock market rose, and that's why gold and silver fell. Originally, gold and silver went up because they thought Trump would be a political disaster. There'd be a lot of uncertainty. Well, there was a lot of uncertainty, but nothing's happened other than the hysteria about people who don't want Trump being president, but there hasn't been much of a disaster, so to speak, other than people who don't want to see him being president, because objectively, the country is still the same, other than perhaps psychologically. Now, there are certain things that have happened, but for the most part, Trump has not changed much other than trying to change certain things through executive orders. But this is the first major piece of legislation, because really, Congress hasn't done much the past year. All Trump's done is done a lot of tweets and changed the tone, but there hasn't been a lot of substantive changes, but this is it. This is a substantive change. These tax cuts are real, and they will have an impact. Now, the question is whether this is going to be buy on the rumor and sell on the fact. But what's happened, the reaction was immediate. I don't know if it was fixed or not. There's Trump signing the tax bill. Oh, briefly, Trump was not in violation of the emoluments clause. Someone had sued Trump for saying that he was profiting from his office as president, and I don't know if that would be his intention to become president so he could make money. I saw something the other day where he's actually losing money being president. I don't think that's why he ran, but anyway, the court threw that out. But back to the tax reform bill. It passed the House, and then it went back to the Senate. It passed the Senate. There was a rules issue, and they had to go back to the House, and they passed it by a greater number. But the real key here was that it was passed by only Republicans. It's reminiscent of the Affordable Care Act, Health Care Act, or the Obamacare that was passed only by Democrats. This tax bill was passed only by Republicans. Now, the fallout or the positive reaction to this this is what's going to make the 2018 elections for Congress. But right after the bill was passed, AT&T said it would give 200,000 workers a $1,000 bonus to celebrate the tax bill. Fifth Third Bancorp unveiled bonuses and raised the minimum wage. Wells Fargo also followed with, I think, $1,000 bonuses. Comcast also gave its non-executive bonuses. These are very large companies reacting to the fact that they know they're going to have a better tax deal, and they're able to trickle this down to their employees. Now, of course, the Democrats would have preferred that the government could have handed this money out rather than the companies. So we're going to have to see whether these tax cuts are going to help the overall economy. Now, the Democrats are saying that they're only going to help the wealthy, and that that this is somehow a ripoff because the wealthy are getting the greater benefit of the tax cuts. But then again, of course, they pay the greater amount of the taxes, so they're going to pay less taxes. But the Democrats look at paying less taxes as somehow stealing from people that are less fortunate. I think the regular taxes, I was looking at 50, 70, 80, that range, you get some tax benefit. You definitely will pay less in most places. However, for people, I think, in those blue states that may be upper middle class, they may get hosed because they can't deduct their state and local taxes. So there's some politics in that. But for the most part, it looks like, yes, the rich will definitely make more money or get to keep more money. And the middle class people not in the blue states will definitely keep more money. And then they kept the things like the child credits and the... So there's really something in there for everyone, other than, I would say, people who have homes, which you don't have to be rich in some of those blue states. I think if the home is worth more than $625,000, that's like a regular size home in most states. But that's what they cost in New Jersey and New York and California. Those people are going to get hurt because they can't deduct their state and local taxes. So we're going to see how this plays out in November next year. Whether we're going to have inflation as a result, because there should be more money flowing in the economy. What will the Fed do if we do have inflation that's caused not by monetary policy, which is the Fed, but rather by fiscal policy, which is what Congress just passed. So if indeed this is going to be inflationary, we're going to have to see is whether the Fed and Powell, the new incoming Fed chairman, will raise interest rates to stem it off, or whether they will allow a certain amount of inflation because they view it as expansionary and good for growth. My guess is we're going to see a pickup in inflation. We're going to see interest rates rise, but not as fast as the inflation. And that might be good for gold and the stock market, but the stock market could get a little toppy and a little pricey. And if it falls a bit, that might be good for gold. And here I write, it could be a coincidence. Is it a coincidence just these 5 companies come out and announce these minimum wage hikes? Or did they get, and bonuses, or did they get some type of advance notice or coordination with the White House and their Congress to do this? And a lot of people are calling this a tax scam, or at least the Democrats are, it's a tax scam. I don't view it as stealing money from me. If someone who makes a lot of money gets more money back, they're not taking it from me. See, what's interesting about this bill, it's not like they gave the rich people tax cuts and then cut all the spending. Then you could say, well, if you take the collective view, well, they're not paying anything and we're losing. That's not what they did. Everyone's getting all the benefits, it seems, that they're getting. It's just that the tax cuts are greater for the rich. So we'll have to see what's going to happen there. Now, let's talk about the dollar quickly. I put this chart together. I just want everyone to see it. People talk about the dollar collapse for years, but here's the last 10 years I've been talking about the dollar collapse. The dollar is doing better now than it was basically since 2008, 9, 10, 11. Basically, the dollar's gotten better ever since the Fed gave up QE at the end of 2014. You can see it's gone up and it's basically stayed up. But also this idea of dumping treasuries and no one wants the dollar, that's not true. That is definitely not true. Here, Venezuelans, I'd written an article about this. Venezuelans want dollar and not for toilet paper. But this was a couple months ago I wrote this, but here is an article in Reuters. Venezuelans scramble to survive as merchants demand dollars. So Venezuela, of all the nonsense, oh, they're accepting yuan. Yeah, they want dollars. That's a fact. No one wants the yuan. That's a gold bug fantasy that the yuan is taking over internationalization of the yuan. It's 1.4% of international reserves. And it's not going up and hasn't been going up. But gold-backed yuan and all this other nonsense about trade and gold, and it's not happening. Okay. Oh, here's one. Russia supposedly right at the center of the BRICS nations against dollar hegemony. Well, they announced the foreign ministry to increase foreign currency buying in 2018, which means they're going to add more dollars. Specifically said so. I've done charts on this. I showed that the increase in holdings of U.S. Treasury by Russia, that's what's happening. They're not dumping treasuries. Yes, they're trying to do trade outside of the dollar, but still the dollar is a dominant international currency. Permian Basin, now that's the area where they do the shale in Texas, and I reported on this a few months ago, earlier in the year, that U.S. shale oil and oil production is increasing, and so are its exports. So all this stuff about the petrodollar, well, countries are going to need dollars to buy oil from the U.S. The United States is becoming a major oil exporter. Bitcoin futures are out. I call them gambling. There they are at the craps table. So Litecoin. Litecoin is life. Litecoin had a down week just like all the cryptocurrencies, but it had continued media attention. There's a series of stories here about the cryptocurrency that outperformed Bitcoin. There are many. You're now seeing a lot of stories covering the altcoins, Ripple, Cardano, Ethereum, Zcash, Dash, all gaining prominence. And if you do a side-by-side comparison amongst Litecoin and the other altcoins, some of them on paper have attributes that are better than Bitcoin in that they're faster, they're less expensive to use, and also because they're cheaper, they have bigger upside. You're starting to see that narrative play out here. Here's Brian Kelly. Like Litecoin has a technical lead over Bitcoin, faster confirmation times. It's accepted at Steam for that reason, and Bitcoin was dropped. Here's another story. Litecoin is faster. A lot of attention. Here's Forbes talking about it. Litecoin and in Bloomberg. There's just a lot of stories now, people taking a look downstream from Bitcoin. Interestingly enough, the tarnish on Bitcoin for being slow and expensive is actually, they're saying that's not a bug, it's a feature. Why? Well, so is gold. It's hard to sell gold. You got to remove it from the vault. You don't just carry around $15,000 worth of gold. You have to go to the vault. You have to get it assayed. But it's great as a store of value, and you use it on big ticket items. Okay, so that's the concept of Bitcoin now. Is not that it's going to change the world and it's the fastest and cheapest way to send money across borders. You can buy anything with it. Now they're saying it's this digital secure store of value, and leave the fast features to the smaller coins, the altcoins. But again, the comparisons now, especially with Litecoin, here's Litecoin and Yahoo Finance. What is it? Payment processors now looking at Litecoin, because if you're going to do transactions with bullion dealers or perhaps Facebook or Amazon, you can't have these long transaction times and high fees like you do have with Bitcoin. So Litecoin is now gaining a lot of prominence because it's basically a clone of Bitcoin with some additional features, and it's less decentralized. It doesn't have the same miner concentration. It's involved with it's Lightning networks. It's going to have a privacy feature. So it's faster than Bitcoin. So, and it's tied to the hip in some ways with Bitcoin. the first Lightning Network, atomic swaps. All that has to do with working with Bitcoin and Litecoin. And in a sense, it is a nice complementary thing, just like when you had gold and silver in the metallic standard. In the period of time when they got rid of gold in the United States as a coin, they still kept it in the monetary system, but the central banks exchanged gold and the people exchanged silver up until 1964, when they removed the silver from the coins in the United States. But they kept the gold for the big guys in the central banks and the monetary system until 1971. And still, the richest people carry gold or have gold in vaults rather than silver. And most of them don't have it with them. They have it in some vault where they have to go to it, or they have to call somebody, or they have to go through James Bond to get it. And the silver, the poorer people have that stacked somewhere in their house. And that's very similar now to the Litecoin Bitcoin in a sense. The Bitcoin isn't used, it's stored. And supposedly the Litecoin will be used. I think what will happen is, if this craze continues, Litecoin will just move up the charts the same way as Bitcoin, and people won't spend their Bitcoin. You'll end up, people will be spending Dogecoin maybe or something else as we go. Litecoin debit cards, meant to be spent, the Litecoin. There's those things coming out now. Litecoin Foundation announcing Coinsbank has one. Then you have this guy, Novogratz. This guy, I guess he was Andy Warhol's 15 Minutes of Fame. He made a big deal out of himself this year, saying he was going to start this fund, and it was going to be Bitcoin, and the herd is coming, and he's a big Bitcoin and Ethereum fan. He was going to get a fund going, and he didn't like Litecoin. I remember he was asked a few weeks ago if he liked it. He said, no, that's just a poor man's Bitcoin. And then when this little collapse happened, he goes on TV saying, oh, I'm not going to do the fund. This is dangerous. I've got to halt hedge fund. Bitcoin's going to drop to 8,000. No sooner does he get the words out of his mouth, Bitcoin goes back up to 15, 16,000. So, I don't know. I mean, if you're going to be in this, I would never do it, but if you're going to be in the Bitcoin space as a fund, you have to have nerves of steel. You see a little selling, and you say, I'm not even going to do this anymore, then you never knew what you were involved with in the first place, because this happens all the time, these major collapses. And again, I wouldn't want to be holding someone else's money, telling them I'm going to make you rich in a crypto fund, and then have the thing collapse. I wouldn't want any part of it. But he made a big deal out of it. The herd is coming, he kept saying. Well, the herd came and sold, and now the herd's back and buying, and who knows. But more stories here. 5 reasons Litecoin is a better choice than Bitcoin. Now, interestingly enough, Charlie Lee, founder of Litecoin, decided he was going to dump all his Bitcoin almost right at the top before this collapse. A lot of people thought that was a bad move. There's pros and cons. He says he sold. He didn't want to have a conflict of interest. Other people say it's not necessary for him to sell to do that. He's saying now he can just focus on Litecoin. I could see both sides to that. I actually prefer the fact that he did sell, as long as he doesn't know anything why he would sell. But there's really nothing he can know. And since he sold, he didn't drive the price down. So there is that component. And I'd rather have somebody who's not a pumper making up stories about the coin or making up stories about the space. I'd rather have somebody who's not doing that, and somebody who's giving you and working full-time not to boost the price, because this isn't like a stock. It's not like he can do much to make the coin better, other than he can direct some of the development work, and the foundation, the Litecoin Foundation, can try to get the more merchants or payment processors to accept it. So let me know what you think. Some people were very offended by it. Some people actually sold as a result of their Litecoin. He says he still has a lot of skin in the game. There is the concept that maybe these people, he's got enough money now, so maybe now he can just devote his life to Litecoin. We'll see what happens. I viewed it as a slightly positive thing, because I think that if his passion really is Litecoin and he already has the money he needs, then, but it does tell you, if he believes in the crypto space, why would did he sell for dollars? If he sold for dollars and now he thinks he has all the money he needs, he doesn't believe in the crypto space, because he should have that money in the crypto space. But if he sold his Litecoin for something else, like let's say Bitcoin, that means he believes in Bitcoin more than Litecoin. So I'm guessing he sold for Bitcoin and some cash, but that's just my guess. But if he sold for some other coin, so I don't know how it's all going to play out, but in some respects the uncertainty is gone because he doesn't have any Litecoin left. There's a whole bunch of stories here. He basically admitted Litecoin was life. That's what I've been saying. He's basically saying that this is what he wants to devote his life to. So Litecoin is life. But he did leave us with saying that he's expect a merchant processor to be on board next year, a popular online wallet, goods trading platform, and one huge unexpected surprise. So one thing about cryptocurrencies, they're like .com stocks in that they trade on news. The guy goes on, a CEO or like a creator of a coin goes to CNBC, the price goes up. We're still in that bubble phase. We just don't know where it ends. There was a Litecoin Facebook rumor, but I don't speculate on this stuff. I have the stuff that people send to me for donations, but I don't trade these currencies. I don't know how anyone can insist they know where they're going. Look at this Novogratz guy. He backed out of the whole thing on one drop, and that's how volatile this space is. And I view it as gambling, unless you're convinced that this is the future and that these coins are the future, and that's where you want to be. You know me, I like to look at all sides, and of course if you look at all sides you convince yourself yes and no as you go along. It's hard to make a judgment. It's just a roll of the dice. Now cryptocurrencies at the beginning of the week were up around 650 billion. They dropped into they lost about 200 billion during the collapse during the week of December 21st, but I think now the entire crypto space, if you take the world's largest cryptocurrencies, I think they're about 590, they're back close to about 600. Yeah, right now I'm checking coin market cap, 599 billion 982,321,222. So that's basically 600 million. You're back almost to where we were before the collapse, and that was about an all-time high. Ethereum, at one point, the Ethereum hippies were happy. The price is over $800. It is now about $770. So the coins are back, and there's big rises. Central banks could hold Bitcoin and Ether for the first time in 2018. Yeah, that's a CEO of blockchain. I'm not. That's him talking his book, I'm sure. I don't believe that. That's a pump. But this guy, this old guy here, well, I shouldn't call him an old guy, whoever he is, Bill Miller, hedge fund, half its money in Bitcoin. So he's a little more confident than Novogratz. Car dealership. We saw a couple of these articles this week. Car dealership in Albany accepting Bitcoin. We saw a Lamborghini dealer selling Bitcoin, Lamborghinis for 9 Bitcoin. There's Ron Paul, biggest bubble of them all. It's Fed's fault, he says. As an analyst saying that Bitcoin's going to go to 300, now 400,000. It's going to surge past 20. There's the Lamborghini. And they want 9.64 Bitcoin for that one. It's a nice price. Just another point about these analysts. They like to say tulips and bubble and shoe shine boys. The other thing they do is they focus on Bitcoin. A lot of the criticisms they level about Bitcoin, about it being slow and expensive, that doesn't apply to altcoins like Litecoin, Dash, Monero, and so on. And also they say it's not anonymous. Well, Monero's anonymous. So their analysis is not very deep. They may have learned as much as they could about Bitcoin in passing, and then they apply that to the whole crypto space. And then, of course, there's ICOs, which have nothing to do with being currencies. They're tokens. They're about stakes in companies, or maybe they're not stakes in companies. Who knows what they are, but they're not even anything like cryptocurrencies. They're not meant to be currencies. They're representation of some sort of value or no value whatsoever, or promise in the future, like 10x or Populous. There's so many different things out there. You can't just look at Bitcoin. Bitcoin doesn't even do smart contracts. Bitcoin's a currency. So that's why I it's hard for me to take seriously some of the analysis about bubbles and Bitcoin when they haven't done enough of a deep dive into the whole crypto, I won't call it space, because it's not just cryptocurrencies, it's a whole ecosystem, and there's a lot of stuff in there that has bubble written all over it. There's a lot of stuff in there that has fraud written all over it, and there's a lot of stuff in there that has promise written all over it. And you can't just like swipe it with one brush and say it's all Bitcoin, because it's not. Not all of these coins are slow and expensive, and they're not all currencies. All right, and again, I try to view this as art. It's not art, but I think that the way you have to value the cryptocurrencies are like paintings, and you have to view it that there's a limited market for these things, and people that are aficionados of cryptocurrencies, they have their favorite coins, and they're willing to pay for them. That's it. And the fact that there's people that don't find any value in cryptocurrencies is as irrelevant to their value as it is for people who have no use for Picasso. They think his paintings are ugly. Doesn't matter what those people think. They're not buying or selling Picassos. It's the same with, and again, I'm not saying that a Litecoin or Monero is a Picasso. I'm saying that that's how they're looked at. They don't produce income. They just are, and people like them and are willing to pay for them as they are. And they're limited in number, and you can say, oh, there's a limited number of cryptocurrencies that can come into effect. Sure. And there's an unlimited number of painters who can paint like Picasso. Kind of. I mean, you could copy Picasso. You can make a lot of... I can draw some squiggly lines and say it's a Picasso. In any event, that's where I think we are with the pricing, and that's why you can't nail down the pricing. And if more and more people become aficionados of cryptocurrencies, they see the promise in them, they're going to buy them. And there's a limited number to buy, and they'll try to bring more out, and maybe the ones they bring out won't have the ecosystem, they won't be viewed as valuable. Who knows? Or the whole thing could just be one giant bubble that collapses next week. I don't know. But I am not willing to bet anything, or to insist is really the word, not bet. I can make a bet, but I can't insist that one thing or the other is going to happen. Now, this Bcash thing during the week, Bcash had a big pump because it joined up with Coinbase, and Bcash is trying to present itself as the actual Bitcoin. They're using the word Bitcoin Core to explain what Bitcoin is, and they're trying to say it's faster. And then they have this, definitely works when people don't know any better. So the guy who owns Bitcoin.com likes Bcash. So people go to Bitcoin.com and they think, oh, well, this is Bitcoin. And he's peddling Bitcoin Cash. It's a fork of Bitcoin. And people are thinking, there he is, flipping the bird, because he doesn't like it called Bcash. It's his project, and he wants it called Bitcoin Cash. He thinks he has interpreted Satoshi Sakamoto, whatever his name is. This whole thing is almost like when you have religions split, where you have certain people interpreting it one way, other people interpreting it the other way. But definitely the Bcash people are pushing the idea that what they've forked out with their miners is the real Bitcoin, and that they're trying to call the other one Bitcoin Core. And by getting onto Coinbase, they now have a place where the average person will see it, and obviously they're going to be confused. What's interesting about Bitcoin Cash is on the day that, and this is the issue with Coinbase, they showed a price of $8,500. It never was $8,500. You couldn't buy it and you couldn't sell it at that price. But that's where they had listed it. And then, of course, when Roger Ver, who's pushing Bcash, went on CNBC, they already had the screenshot of this. So it looked like Bcash was, half the value of Bitcoin. And this was now the flippening, and it was going to change because Bitcoin was slow. And the Bcash was this new, faster rival. And it created a lot of problems because Coinbase had said that they were going to release the Bitcoin Cash for the people who had it in their wallets before the fork, and they were entitled to have Bitcoin Cash. First, they weren't going to release it at all, and then they decided to release it, and they put out a notice they were going to release it on January 1st, and it was only going to be to withdraw it. They weren't going to trade in it. And then, boom, on December 19th, it's fully, or supposedly, it's available on Coinbase, but it really wasn't. It was all disabled, but they had the price up there, $84.99. And it was obvious for about 12 hours that Bcash rose from like $1,200 to $4,000, and it was because they knew, the word had leaked, that it was going to be on Coinbase, and then they started playing defense over at Coinbase, saying how they had all these things. This is who asked, because let's just see what this guy here says. They're basically backpedaling and saying, oh, we had a lot of security in place. We maintain a strict trading policy, internal guidelines for employees. Because it was obvious someone found out. And what I think happened was too many people at Coinbase knew about this. Too many vendors knew about this. And once, if you ever do a deal that is confidential, even with NDAs, once it gets over past a handful of people, it's over, because someone's going to know somebody who says something, and you got 20, 50 people, it's bound to slip out, unless there's a death penalty associated with. No, and plus, this slips out. How do you? It's not even like with stock trading where you could check the stock records. So in any event, it looked like insider trading. Here's Coinbase saying they maintain a strict trading, but the problem is, the real issue with Coinbase was everybody knew, or at least they thought they knew, that it was going to happen on January 1st. And if they had just stuck to that, they wouldn't have this problem. Now they look like they were pumping Bcash because they had that bad price on there, which then they used on CNBC the next day. And they said, look, if this changes, this January 1 date, we'll notify all customers an email, updated email. They never did that. They just, all of a sudden, it showed up on people's screens that they were doing Bcash. And there was no email. So, of course, the next day, Roger's on CNBC Fast Money, and he's touting all the benefits of Bcash, and he's got that price behind him. It keeps appearing there, flipping the bird there. Now, I happened to check out the price of Bcash on Coinbase. I found that at zero, so that's a mistake. I guess Coinbase isn't equipped to properly track Bcash, because they had it at $9,000 almost, and then they had it at zero, and I don't know how they got that zero number, because it was never zero. And there he is again, flipping you the bird. So it never grows old there. Oh. All right. So I asked my followers which one they like better, Litecoin or Bcash, and it was Litecoin. CNBC, trying to cash in on the controversy, they asked the same question, Bitcoin or Bcash, and Bcash definitely out of 40,000 people only got 1 in 5 votes. And there's the chart I was telling you about. Bitcoin crashes roughly once per quarter. Buy, sell, Bcash. I don't know what that is. Now, people back in November, they were planning, I asked this poll, in November, on January 1st, when they released Bcash, what would you do? Some said they would dump it immediately. Some said they would hold it. But they never got the chance. And now they have the chance, but it was thrust upon them weeks in advance. And for the first 2 days, you couldn't do anything with it anyway, even though it was announced, because Coinbase had disabled buys and sells on it. Well, that's it for the Bcash controversy. There's an $8,400 price again for Bitcoin. That was a very big deal. And of course, now there's going to be lawsuits here because the insider trading, people lost money. They didn't expect this. The guy at Coinbase, the head guy, was trying to say they have a strict policy. But from listening to it, it made it sound like too many people knew. Just too many people knew. And they should have just gone along with the date of January 1st. That's not what they did. And they want to go public, but it's not good to go public when you have pending litigation. I don't know if there's been any lawsuits filed, but there's been people complaining about it. We'll see if they actually file the lawsuits. There's people complaining, but that's just sending something into the SEC. I don't know if they'll get any satisfaction just from the SEC. They probably have to file lawsuits to see if they get anything. Now, there was also this talk about CNBC being involved. I don't know. There's people that know people at CNBC, and you can read those speculations. I don't know anything about it, but people are definitely annoyed that Bcash burst on the scene, created some confusion, as some type of better Bitcoin, and Coinbase was supposedly promoting it. Now, Belarus legalizes Bitcoins. ICOs makes them tax exempt. We're now in the regulation spot. South Korea financial regulators say virtual currencies are not currencies, but they're not going to regulate beyond rules already announced. So the idea that somehow they're going to clamp down on Bitcoin is not true. They're going to clamp down on legal use of these things, and they're going to try to tax them. They're not going to try to get rid of them. Here, SEC suspends trading in crypto companies. This is of course, the fraud ICOs they're going to go after. But again, it's another sign that they're not going to ban cryptocurrencies and ICOs. Why? Because there's a lot of banking fees, lawyer fees, taxes to get. This is a cash cow, this crypto scene. They're not looking to get rid of this. Here, Bitcoin warnings grow more strident as Singapore urges extreme caution. But now Singapore is a very... I remember in the 80s they used to cane people for shoplifting. So Singapore is a very small country, and it's a very tightly knit country. So I guess they want their authority respected. Bitcoin not proven as a, what do they say, as a reliable currency or credible currency, says the Japanese finance minister. But the Japanese have already adopted Bitcoin. You can use Bitcoin there. It's not illegal. They've regulated it. They're just saying it's not credible. But they're not taking any action against Bitcoin. The EU agrees clamp down on Bitcoin platforms to tackle money laundering, of course. And they'll do that with anything that people launder money, whether it's gold or silver, plane tickets. They will clamp down on money laundering. That's the main thing governments need to do to stop crime. If they can't stop the crime, they have to go after follow the money. It goes all the way back to Al Capone getting them for tax evasion. Stay away from Bitcoin, warns Danish central bank chief. So you had a lot of talk. U.S. regulator says Bitcoin currently not a threat to the banking system. We hear that refrain a lot from a lot of the regulators, a lot of the central banks, that Bitcoin's not a threat yet, or not a threat currently. And again, it's the size of it. Bitcoin itself is worth all the Bitcoin. You buy them all, it's $250 billion. Month of QE, it's not that much. Bank of England, Carney sees problem with central bank issued cryptocurrencies. You know, there is a huge problem. A centralized blockchain that gets hacked, counterfeited, you're screwed. There's nothing you can do about it. It's not the same as when you have the printing presses. You can stop the printing presses. Blockchain works best when it's decentralized, not when it's centralized. Or it works best when there's not value being transmitted, it's just keeping records. But a cryptocurrency that's centralized blockchain, that could be a big problem. And also I'm sure there's a lot of insider trading going on with these futures. All you have to do is go on the other exchanges, no one knows who you are. You front run your long or short trade on the physical exchange or the Bitcoin exchange, and then you just take your position accordingly. Swiss National Bank prints francs to buy the company that makes the paper used to print francs. Now that is a first. I think that's the story of the week. So the Swiss National Bank is buying the company that makes the paper that prints the francs. So they print the money to buy. There it is, Wall Street Journal. Swiss National Bank bought a 90% stake in Landquart, which makes the paper used for franc notes. Unbelievable. All right, we're getting close to the end here now. Gold, we had some gold stories there. You want to check those out. Russia added a record amount of gold to reserves in 2017. I covered that. You want to check that out. I got the charts on Russian gold reserves, the biggest year yet for adding gold to reserves. Shanghai Gold Exchange we covered, another big year for them. Here's the significant gold story. Moscow Exchange to launch deliverable gold futures in 2018. You want to check that story out in Reuters. And Bitcoin and gold, we got a lot there. Hedge funds are pulling out of gold, so they say. Now the gold pumper stories. China kneecaps the dollar. Dollar collapse game changer. You're still seeing this nonsense. These gold pumper stories. Gold will soar as China kneecaps the dollar. Here you go. Gold rally will implode the Bitcoin party, says Peter Schiff. Is this 2014 or 15 or 16? Well, when did he say this? This is something he's been saying. Bitcoin's going to collapse and gold's going to skyrocket. Now, buried gold. Beautiful gold coins here from the 16th century. You want to check these stories out. Roman coins we found during the week. Medieval gold ring. Tudor silver dress pin. This is in Cornwall in Western England out there. Trump says the new EPA regulations that make it gold mining in Alaska again. Found silver. Now, there's an interesting story. Fontana Hog Farm. Workers find silver. I'm not going to spoil the party there. You can check that out, how they found silver in a old hog farm. Panning for silver in laundry wastewater. Another interesting story. Here's one, a nice find. First ever English gold coin was worth a penny, and it will sell for an unbelievable amount. 52,000 of these King Henry III gold pennies were struck nearly 800 years ago before they realized they were too heavy. So there's a problem with gold. It's too heavy. Certainly for pennies. What a nice looking coin there, 800 years ago. Scotland's early silver archaeology. Some more finds in Scotland. Most of this is... these were not Roman coins that they found, because the Romans were up in Scotland, up by Hadrian's Wall. But these were coins that were made from recycled Roman silver. And there's your laundry wastewater, where there's some silver from the nanoparticles. Here's Piercing the Mystery of the Cosmic Origins of Gold. Another story about the origins of colliding comets with gold. Neutron star crashes. There you go. That's what we're talking about. And then some more smuggling. They're now saying that gold smugglers are shifting base to Europe to avoid detection, say officials at Delhi Airport. So it's constant cat and mouse game. A lot of people trying to get gold into India to avoid the duty. And edible gold, there's a nice looking gold donut. It stands donuts. It's gold coated. And here we are with China. Let's just take one final look this week at China's vision of peace and harmony through trade and sound money. That's what you hear from the gold bugs. China's wonderful. They've got gold. Just totally ignoring the fact that China's totalitarian, not a sound money country, tremendous amounts of debt. But that's all they ever want to talk about is China's going to crush the dollar. China's sound money. Here you go. Thousands watch as China sentences 10 to death in a packed stadium. There you go. That is, as long as they got gold, you can live like that. That's great. We'll go to the stadium and watch a end of the dollar hegemony. They've got a 99% conviction rate in the criminal justice system and mass executions. And you get to go to these ceremonies. You can watch them cheer on the executions. Here, what's this one here? China blockchain. Need more debt. China's new economic blueprint shows Beijing seeking growth, softened focus on debt. So China was supposed to start to reduce its debt. They decided, the hell with that. We can't do that. So they're not going to. So their debt is going to grow. And there it is. The deleveraging is over just after a few months. It's probably just after a few months of talking about it. So talk about the U.S. debt. Not even close to what China is. Oh, but China owes it to itself. Worse. Why would you want to buy? Why would you want anything to do with Chinese yuan if you know that the yuan is just printed so they can lend money to themselves? And then the state-owned enterprises, people are well aware of that. If they want to borrow money, they have to borrow and pay back in dollars. Here's life inside China's total surveillance state. Look at that. They have facial recognition. They know exactly what you're doing. They want to know what you're doing, but they got gold. That's where you want to live. EU singles out China as a distorted state-run economy. Now that's interesting because EU is basically a state-run economy. For them to point out that China is, is beyond the pot calling the kettle black. But still, they're right. China is 100% state-run, and that's why they have excessively cheap imports and so on. Going into the EU. What's this one? It's nearly impossible to move about Chinese Xinjiang region without feeling the government's unrelenting game. But game changer. They got gold. They're going to end dollar hegemony. No, they're going to kneecap the dollar. That's exactly what people want. Here we go. China and Russia hold dollars. Yeah, this is a class. We hear this all the time. China and Russia are buying gold to protect themselves against an expected crash. Expected crash in the Chinese yuan. And the U.S. has no way to pay its debts and coming unfunded liabilities unless it prints the dollar into oblivion. Yeah, but China and Russia hold dollars to protect themselves against the yuan collapse or a ruble collapse. In fact, Russia has $108 billion in treasuries and only $73 billion in gold. So this whole story is so one-sided and such nonsense about China and Russia being the sound money countries. They're not, especially China. Russia is. Russia does not have the debt that China has, does not have the debt the United States has. But China is a full-on debt monster, full-on totalitarian society, and they, I don't care how much gold they have, they're going to protect themselves against anything. There it is, 75 billion Russian treasury holdings, and they have 105 billion in U.S. dollars. And just to point, the gold pumpers, they love to cherry-pick facts, add a little history, hyperbole, but they don't admit why they've been wrong for 7 years. Been hearing the end of the bull for 5 years. Sure, one day it'll run out of steam, but they've done nothing but hold gold and watch more than a half a decade of YouTube videos saying you weren't wrong, we were just early. Here's the dollar collapse. That's my point. This is, people have been saying dollar collapse, dollar collapse. Where? Oh, but the use of dollar hegemony and they're trading in yuan. Yeah, it's all anecdotal stuff. It's not that big of a deal. The cult of asset infatuation are many, but only one is life, and that cult is Litecoin. There's another point. I kid around about Litecoin, but there are people that the way they view their assets, it is a religion. Once you're a gold bug or a silver bug or a paper bug or a stock jockey, whatever it is, you take it very, very seriously, and it becomes an asset infatuation. And everything you see means that your asset is great and it's going up. And it doesn't always happen that way. Here, China's developing a police station manned only by robots. There's a great society. You're going to be able to tell exactly what you do, but there will be no people manning the police station. That's AI. People are worried about Bitcoin and the mark of the beast. How about a society where they chip you, they follow you around, and then there's not even police following you around. There's this AI chasing you around and knowing what you're doing. I think that's a lot more problematic. And their debt. China audit finds provinces fake data and borrowed illegal. That's China itself saying that. Tell me it ain't so. So, there we are. That's where we're going to leave you with China. Oh, China's war on Christmas is gathering pace, so we'll see. Well, thank you very much. This was a long report only because we had an extra few days in the week, but next week we'll try to keep it shorter. Thanks very much for listening.